What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 27th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we're going to be diving straight into altcoins and the significant confidence and rebounds we've seen in altcoins against Bitcoin. And the question here remains whether or not we're still within the altcoin cycle. I'm going to be talking about how we can spot winners in the market using ratios in the current altcoin, or more specifically, DeFi and Oracle spaces. And outside of that as well, spend some time diving in through some important updates throughout the market. So without further ado, guys, let's go ahead and dive straight into it. Taking a look over the last 24 hours here, we can not only see that Bitcoin and Ethereum, as well as a lot of large caps, are up in the green, but we can see that a variety of cryptocurrencies from Nexo, Polygon, Telcoin, Thorchain, Solana, Celo, Holo, Chainlink, Engine Coin, Bakery Token, so many cryptos above 20%, as well as many other cryptos following in green territory, with very few plays down here in the red here. Now, one thing I want to build into here is really kind of the broad macro conversation here. I understand a lot of people would probably say, Nick, at this point, are you confident on altcoins? We've rallied such a good amount here in the sense of altcoins from bottom to top. In fact, what's really interesting is that if you're viewing market dominance for altcoins in a purely percentage basis, you'll see here that we actually rallied more top to bottom for this rally than we did back in the December 2017 rally, right? When we set our bottom here in early December going into January 2018. And the question here remaining, Nick, is this just a clear sign that we've, overextended ourselves? Well, one of the things that I would say to keep in mind here, guys, is first off, even after we had a pretty big reversal here, these are 2-week candles that we're taking a look at here. Even though we had quite a big reversal here, knocking us down from around 60% market dominance to 52, usually I would say that if we had that kind of reversal and started to tick downward, I would say that for sure the trend is reversed, step back from altcoins, right? Or at least start to take in profits that you've made against Bitcoin and consider that we might be at a market cycle top, right? But to be honest with you guys, Bitcoin's holding up quite well. And I'm quite confident after we've done the analysis that this is a mid-cycle correction, albeit overextended because of excessive leverage in the market, excessive credit and risk getting liquidated and causing capitulation price. But outside of that as well, as Bitcoin has shown confidence, altcoins are holding up quite nicely here. And you can take a look at it any time frame you want. I'm looking at the 2 weeks so we can see history here. And I want to come back to this here and highlight this. But we can go here and take a look at the daily here. The rebound has been really nice. And what I'm looking for here is hopefully for continuation back to those highs and breaking above this point of resistance that historically weighed down altcoin dominance back in May of 2018. Right, take it here to the weekly here so you can see it here in this viewpoint, right? We've recovered a lot of those losses here. And usually when you have these kind of declines, these kind of significant declines, if you get an engulfing candle, right, here on this current week where we recover all those losses, most likely you're going to see this continue higher. And that's one important point here that I want to exemplify or kind of express here, which is that you don't want to fight the trend, guys. Don't fight the trend until you get the confirmations that make it very clear that this trend is over, right? And to be honest, to build on top of that, there's a lot of fundamental developments going on out of all this scare in the market that actually benefit altcoins. One of the biggest DeFi plays, Uniswap, has now finally, Robert Leschner, who's actually part of the Compound Protocol, he put out a snapshot poll to gauge interest in deploying Uniswap v3, the newest version of Uniswap, on Arbitrum. And Arbitrum is going to offer basically an implementation of optimistic rollups, so a layer 2 implementation of the Uniswap v3 protocol. Now, it has been months and months and months of constant promise and hope that Uniswap v3 would be deployed on some type of layer 2 scaling solution. And originally Hayden and the team and Uniswap had kind of pinned themselves to implementing on Optimism, which is a specified implementation of optimistic rollups. It's a project in the crypto space. And what's really interesting here is that as Arbitrum and a few other players have started to come up earlier, people have been saying, hey, can we get Uniswap v3 on Polygon, on other types of layers 2 scaling solutions or sidechains, right? And what's really nice is that the actual proposal here, if we take a look at the website, the governance here is showcasing immense support. It's going to take a second here to load the results, but last I checked, there was like practically, there's still 0 votes or in this case, 205 uni voted, whereas 41.4 million uni has voted in favor of this. So what this means is that as Uniswap v3, albeit has already been garnering a lot of increased value locked up in the protocol, nearly 10xing here in less than a month, a matter of a little over 3 weeks, and capturing high levels of volume, especially on a basis of TVL. Uniswap v3, with its capital efficiency that's unique to the protocol and protected by the certain types of code licensing that they have. This sets Uni in a really good position. This is the position that I've wanted to see for a long period of time, where you get the capital efficiency of Uniswap on layer 2. It will secure Uniswap's position very likely to be this kind of liquidity vortex to become the ultimate automated market maker, not just for crypto tokens, but I think eventually for all types of different assets, for currency exchange, for all types of different, market order markets in this case, where you want to swap from one asset to another. And look at the rebound here that is played out here. We're right back to where we were practically just a couple days before the major sell-off against Bitcoin. Now, albeit that in dollar terms, and we'll take a look at that in just a moment, it's still down from the kind of $45 peak. It's great to see altcoins still maintaining confidence and a lot of the money moving away from the rampant speculation, the leverage trading in the market into real plays on spot markets, right? And take a look at Uni as well against ETH. One thing we pointed out here as we started to get down towards this range was that you were getting towards a point of some previous points of resistance and support. And albeit we called it a little bit early here around 11th of May, and we did come down here towards around 0.08 on the Uni to ETH ratio, right? We built a custom ratio here of Uni divided by ETH. We can see here now that we've clearly found support at a previous range here in the past where we double bottomed, a previous point of resistance in the past, and now we're reversing back up. As an investor in this market, when you have these kind of discounts, one really cool thing that you can do if you happen to find yourself in a loss, and this is not always relevant for every trader, but it is relevant for a lot of people in the US. If you happen to have bought Uni at a very high price and you're now down here at the bottom, what's really cool is you can basically sell your position and rotate into another play in the market. Let's say, for example, you weren't in Uniswap. My apologies. Let's say you'd bought ETH or something like that, or bought some other kind of crypto. Right? If you were at a loss from when you entered in and then when you sold it, you not only get to write off a loss in this case, but outside of that, well, you can cycle in on the ratios to a play that looks nice, that looks like it's at a discount and signaling that it's ready to outpace your previous position or the previous crypto you're in. And a case of that would be like if you had owned ETH, or in this case, you can see here that Uni is starting to outpace ETH. So this is, again, what I like to use. I like to use ratios. It doesn't complicate things. It shows me generally when things are at a discount and when I should be cycling in from one asset to another. Now, bear in mind, if you have gains, considering your capital gains tax implications might not be worth it, right? But I've happened to be in Uni for a while, and I didn't want to find myself 2 steps behind, even as ETH was starting to outpace Uni from back here in March. I feel now it's going to start to recoup against those the kind of like decay in performance against ETH now. And we can see here as well, the USD chart looks like it's a true spring event right here, guys. If you guys understand a little bit, I have a good friend of mine, Tio from the Arcane Bear, who's been talking about this kind of spring event from the Wyckoff distribution patterns. You can see here that we've got a clear rebound here from the midpoint here of the cycle. And it just seems like from back here around $13, we're up here towards nearly $30 in price. And this looks like it's just going to start to leapfrog off. And the key point I want to emphasize here, right, not just for Uni, but for a lot of cryptos, is that even though not only do we still have some range here to revisit back to the previous relative highs for this cycle for altcoin dominance, but that liquidity and value can circulate from one play to another, right? There's a lot of froth in the market, guys, that's still getting watered out. And now a lot of that liquidity and valuation is going towards projects that actually deserve it to a degree, or at least have some substantial upside in the long run. Take a look at Link here, right? Chainlink against Bitcoin, right? We can see here that Chainlink has been holding on this line of support here. This was a clear point to watch here for Chainlink against Bitcoin on the dip. And we had an opportunity where Chainlink went from 0.001 BTC per token down to a clear 50% correction. A clear 50% correction on that line of support. Buyers came in, scooped it up, pretty much nearly doubling against Bitcoin here in a short time frame. It looks like we're going to continue to climb up here and practically double against that low point. right? And even though you don't pick the bottom here, guys, question is, does this still have further upside to go? And to be honest, if Link maintains this momentum, if we see this broader spring and kind of some of the large and mid cap tokens in the market, I think there's a really good chance this could continue higher. And why do I say that? Well, it's because of the ratio here. Very similar to Uniswap's chart in this case. We've got a longer term chart here for Chainlink divided by Ethereum. You can see we have our midpoint here. We've got the kind of lower range here and then a higher extended range. And look at this. We bounce right off this kind of midline here between the points of kind of general resistance and support, right? Now making it support here and rebounding strongly here. Got to give credit where it's due. I had a friend in the space, Rudd, who mentioned this. He knew that I mentioned the ratio a long time ago and stuff, and he, right, kind of rekindled me to recheck it. And I was like, I'm happy I have some Link exposure because I got to be honest, if I have any kind of ETH, I'm definitely looking to possibly reaccumulate or kind of recycle it into Link here because it's at a nice discount against Ethereum, right? It's about 1/4 of where it was at its peak here, back here in August of 2020, right? And it's not really an argument of fundamentals of me liking Link over Ethereum. It's just simply what the chart and the ratio is showing me, right? Generally speaking, it hasn't been this cheap since back here in October of 2019, right? So I like discount opportunities. I like to cycle from one asset to another when it makes sense. Now, some other cool developments that I just wanted to share here, guys. One of the projects I advise for in relation to Link here is the recent partnership from Benchmark Protocol, project that I advise for working with Chainlink. And they're utilizing Chainlink oracles in a really unique way. Whereas I've seen a lot of kind of Chainlink partnerships that, for example, are just kind of, they're interesting maybe to a degree. This one is quite exciting as the benchmark protocol utilizes the VIX in order to actually influence its rebasing mechanism. It's a rebasing currency like Amplifor that we've talked about as well. They're actually going to be pulling in the price feeds of VXX, which is one of the most relative ETFs or trading products that do follow or kind of correlate with the VIX. So it's a way that you can actually start to measure and pull from the Chicago Board Options Exchange VIX and implement it into the benchmark protocol. So this is actually like a very core and elemental part of Benchmark's actual utility as a token to be able to correlate with the VIX and be able to boost supply when there is in the VIX or basically increased volatility in traditional equity markets that might signal broader fear across all asset markets. So really, really cool partnership here, guys. Again, got to say Benchmark worked a long time to make this happen. So it's really exciting to see. And I want to give a big shout out to the team for that. Now, outside of that as well, there's some really cool developments for the Benchmark protocol that are coming up here in the near future. I've been, again, working with the team behind the scenes and stuff. And I have to say, guys, I would keep an eye on the project and some of the future developments between the market that they're creating, which is a peer-to-peer market for lending and borrowing that we talked about. So kind of stepping away from the kind of concept of pools and allowing people to actually build competitive markets for lending and borrowing, which I'm very interested in. I've always been interested in the concept of whether it be peer-to-peer markets, the idea of being able to open up more competition of lending and borrowing. And they've got some big developments coming, so stay tuned for it, guys. I think you guys are really going to enjoy it. Now, outside of this as well, guys, I want to spend some time, especially as many of you are looking for tools to increase your trading capabilities in the market, to kind of find opportunities. I know it's difficult when the market's rebounding, everyone's excited again. The question here remains whether or not you can find the right setups in this case in the market to get ready. And the thing I don't want to emphasize, I don't want to emphasize over trading here, but there's nothing wrong, especially if you happen to have this ability to harvest a tax loss event, to spot other things you should cycle into in the market. And for today's sponsor, we're going to be taking a look over Altfins. Now, we talked about Altfins here on the channel before, but they've got some really cool tools and new features since we last chatted about them that they added to the platform. So one of the key things here that I wanted to talk about here is that their trading patterns, where they have an automatic screener that goes over spotting certain patterns in the market, similar to a platform like FinViz in traditional equity markets. They not only allow you to have a variety of timeframes here, we can get different types of setups. So if you're trading on shorter term timeframes, unlike me, that's perfectly fine. If you're trading on longer term timeframes, you like to look at the daily, the weekly. In this case, you can actually set up those trading patterns here on Altfins. And what's cool is they just bumped up from over 250 coins that they're scanning for, 250 different trading pairs, up to 500 different pairs. So you're getting twice the amount of setups here that are showcasing here on the Altfins platform. Outside of that as well, you've got curated charts. So these curated charts here, again, are spotting certain types of technical patterns, certain types of outlooks here, whether they're bullish, neutral, or bearish, and they spot different types of cryptocurrencies here. So there's one here, for example, that I clicked on for Matic that actually showcases specific resistance zones, support zones, all types of different metrics, considering things like oscillators, the RSI, the stochastic RSI, etc., the RSI divergence, all types of different metrics so you can get a quick reading on a variety of different things, as well as some brief descriptions and overviews on the actual project, as well as news events, as Polygon has been one in the spotlight here. But again, this is a really, really cool breakdown here. Just summarizes things. You can see the MACD giving up buy signals, the RSI being at relatively healthy levels, not being as overextended as it was before, even as we've gotten some buying activity coming up to spring Polygon even higher in this case. All right. So these are some of the really cool tools you can get access to on Altfins. But again, for those who may not know, Altfins is a general kind of trader platform here. It kind of adds a variety of different features. The biggest one for me is the screener. You can create custom watch lists. You can get news on the general space. And this whole sidebar here has a variety of tools that can help you to get on top of the market, setting alerts, building out your custom portfolio, inputting all your positions, and also placing custom trades here. Again, all kinds of really neat tools that you can check into. So if you guys are interested, you can check out the link down below in the description to check out the Altfins platform. But that's going to be it for today's video, guys. Thank you all for sticking with me throughout these crazy times in the market. Again, I want to build on just the kind of key point here, which is that we've stuck to our guns here about how we want to interact with the crypto market during this correction. Whether this is the bear market, whether we're seeing kind of the flush on Bitcoin and the altcoin cycle before the end of it all, or if this is more likely towards what we think it is, which is a mid-cycle correction, no matter what it is, we don't want to sell at peak fear. We want to be exposing ourselves to the rebound and making sure that no matter whether we're trying to take profits in the short term or we think that we're going higher, that we don't get caught in the FUD there. We don't get caught in selling at an extreme discount and letting someone else buy our assets very cheap, right? Especially after a mass um, kind of a mass sell-off period of liquidations where prices just start to fall like dominoes. Those are the periods I like to buy. And we took out again our loans that we did and stuff and got more exposure to the market. And so far, it's been paying off quite well, not selling our core assets and using them rather as collateral to get more exposure to the crypto space. All right. But anyways, guys, again, you got to be smart with tools like that and stuff. Again, be patient in the market, guys. Above all, hodling tends to pay off, historically speaking, in the market, and at least making sure to wait for more optimistic periods of time to take profit. All right, guys, that's it for today's video. Thank you all so much for listening to me ramble. As always, if you like the video, consider dropping a like, consider subscribing as well, guys. And if you guys want to catch up on the newest report that's going to be coming out here in the next couple days, you can definitely in the next couple days sign up for the Dash report, which will be dropping early this upcoming month in June. So very excited for what's to come, guys. There's a lot of cool developments going on in the crypto space. I'll see you all in the next video. Take care, everyone.